Good evening, everyone, and welcome to this week's episode of a Junior VC Behind the Scenes. I'm your host, Mazen, and I have with me this week Path and Ramandeep. And we're here to talk to you about this week's piece, Is Navi an instant disruptor or on borrowed time? So to get us started, Path, can you tell us why the team chose to write about Navi this week?
Sure. So basically, so internally, we had 5 points to discuss, and on all 5 points, Navi was like an outlier. So when we speak about or when you think about Navi, so Navi is not a pure player fintech player. So it's more inclined towards introducing new products, unlike a fintech player, which initially starts with creating a distribution, which Navi has not done that. So basically, distribution is one part of it. Obviously, they have focused on that, but at the same time, they have focused on launching new products as well. So that's another key differentiator. Second is they have picked up unusual way of scaling things up. So a lot of these fintech players generally try to avoid the regulatory approvals in the initial stage of growth, which Navi has embraced from the day one. So they now have insurance license, they now have the NBFC license, and they now have the asset management license as well, by by the way of acquiring sort of defunct firms. So we'll talk about that. But yes, that's the other way of looking at things. Third is they have focused on profitability since day one. In both the years they have been profitable. Only in this year they have not been profitable, but we'll talk about that later. Fourth, again unusual thing which we have not seen in the startup ecosystem, is the founder holding onto 97% of the equity. And the fifth, distribution is not the key focus. Apart from that, they are coming out with innovative products to reach to our consumers. So these are the basically five things which segregates Navi from the other fintech players, and that's why we have picked up Navi.
Thanks, Path. Certainly a very compelling story. So Ramandeep, can you tell us how the company was founded and what was the origin story?
Sure. So as we know that one of the mega events of 2018-2019 in the startup world was the acquisition of Flipkart by Walmart, which made Walmart to pay around $16 billion for around 77% of Flipkart. And Sachin Bansal, he initially was a very integral part of the entire process, but later on realized that the vision of the future Flipkart is going to be very different from what he imagined, and hence went on to sell his 5% equity stake, 5.5% stake in the company for around $1 billion. At this time, he started investing in multiple startups first as an angel investor, and then as part of what he started a back acquisition, which was essentially an investment arm of Sachin Bansal. Initially starting with investment in, say, Ola, electric vehicle, which was a huge investment by Sachin Bansal, and followed by a series of investment in the fintech ecosystem. Came to be known as the Navi Technologies in December 2018. And yeah, so that's pretty much where he started off. He never wanted to leave Flipkart, but I think he wanted to ensure that the business that he's going to build in the future is run according to what he really values the most. And as Parth said, that's also one of the reasons that he had invested the most of the initial angel rounds and the Series A rounds, so to say, are from Sachin on with his personal investment, making him even now hold around 97% of the stake in the company when they are looking for an IPO.
And what problem exactly is it solving? And why did Sachin zero in on financial services specifically?
Sure. So see, one thing, Sachin in his own interview has stated a couple of reasons behind his reason for starting a financial services company. Number one, he was sure, and we already have data to say India is one of the largest and the fastest growing fintech markets. Our fintech market size is going on $50 billion business, which means that there is going to be an incremental $100 billion coming in the next decade or so. Then we have a significant number of middle class, which is still untapped opportunity by the traditional mutual fund players and the insurance players. The adoption as compared to any peer, whether it is China or US or UK, is very, very low for the Indian market as compared to these, right? And also we have very world-class public digital infrastructure in the name of India Stack, where you have the DigiLocker, the Aadhaar, you have the BBPS and UPI system, right? Which provides enough uh, wind beneath these beneath the wings that on which the Indian fintech system is flying. So with this belief, and also because of the fact that Indian banking services or the financial services, especially in the segments in which Navi plays, right? Insurance, home loans, and mutual fund has been way less in the Web 2.0 era. That is still very traditional segment as of now. And now it's only now that we're getting into more digital like segment, and now Navi has taken a sort of a starting point in terms of being not only the distributor of these products but also the manufacturer of these financial products with along with its tech savviness.
It certainly sounded like all the right ingredients were in place, both in terms of infrastructure and kind of the right everything coming together at the right time for Navi to kind of take advantage of it. What was the potential size of the market? I mean, what was the TAM, and can you help us understand?
So the TAM of the market, according to several reports that we have looked into, the TAM of the Indian fintech market is around $150 billion, out of which we have $50 billion as the current size in which the Indian fintech ecosystem has already penetrated into. So you are left with another incremental $100 billion for at least the next 5 years.
And so that's the chunk that Navi is really going after, that kind of additional...
Yeah. So that's the chunk that Navi is essentially going after.
Thanks so much for that background, Ramandeep. And Path, maybe you can tell us a bit more about the growth phase. With that kind of solid foundation in place, how did Navi grow in the subsequent years, in the last couple of years?
In the entire finance ecosystem, the most complicated thing is to get a regulatory approval, and that's why you see a lot of this fintech are sort of affiliates to. So basically, they provide the front end, they provide the APIs, but they have some affiliation with let's say a bank or an NBFC through which they basically lend. But now we took a different approach. So Navi wished to become a full stack finance company, basically manufacturing own financial products and not just distributing them. So Navi focused on firms which are not doing well but have some licenses. So they focused on 3 areas. First is NBFCs, so where they bought the Chaitanya Rural Intermediation Development Services, which is commonly known as, or which is popularly known as CRIDS. They had DHFL license, and they had asset management license as well. So within a span of a year, they had 3 different licenses, 3 different business licenses, one for NBFC, one for insurance, and one for asset management. And they were talking to 3 different regulators. So for NBFCs, RBI, for insurance, IRDAI, and for asset management, SEBI. Generally, these 3 licenses will take at least a decade for an established fintech. That has never happened, at least now, as of now, where a fintech which is in early stage have 3 different licenses, and it's providing services of manufacturing products in all 3 phases. So basically, Navi played on the regulatory arbitrage, and that helped with their growth phase. So now they have products where they can actually lend to somebody, they can actually provide options to invest to somebody, and they can provide general insurance to somebody. So basically, the growth phase was set because of this. in my personal opinion. Yeah.
And so they had this unique approach, to kind of building a fintech company in India. And so how did they compare to the competition? It's such a large market and there's so many competitors, kind of taking different approaches. Where does Navi stack up relative to everyone else in the space?
So Navi is basically focusing on 5 different things, or 5 core things, and that's what Navi has proposed, or Navi has suggested in their DRHP document. So basically, it says that distribution is one part of it, where more and more customers come to a platform. So basically, they now have a platform. How do I reduce the cost? So basically, if it is only tech, if it's only everything is digital, then people can come on my platform, and people basically acquiring an additional consumer, the cost of acquisition goes down. So basically, I have more data, and then my cost of acquisition goes down. Third is eventually when I have an NBFC license, I can actually get money at a lesser cost, and I can lend it out. That's where the interest arbitrage is available. I can manufacture products. Then now we can manufacture products and can give to the consumers at an attractive fees and rates, and those products which are generally useful for them. So basically, passive funds or index funds which they are operating to, and then overall a better product and experience is what they cater to, which will eventually get more customers to their platform. So this is basically what Navi terms as a Navi's 5 core principles, and that's what the Navi is playing. As of now, none of the fintech players are doing this, and that's how they're competing against the other players. Yeah.
So it's quite a different approach. Instead of being focused like most of these fintech players on one specific problem, they're going after all of these different things. And what that lets them do is have a much lower cost of acquisition, like you said, of course, which is very interesting. But how does this show up in terms of the financials? Can you walk us through what their metrics look like?
Sure. So when we talk about the AUM, and then eventually we'll come to the profit numbers and loss numbers. So Navi's so during lockdown, when everybody was when every fintech was like tightening up their screws and basically stopped lending because of the fear that what if the NPA increases, Navi actually went out and started lending. Same is the case with health insurance, where they have provided an option that you can pay insurance premium monthly and not in annually. So that's more like in subscription fees or more like an EMI fees, and that's how they position. As a result, they sold like 30,000 policies in just 6 months between June 2021 and December 2021, where the COVID second wave was in India. The share of retail health insurance as a part of their overall portfolio jumped from 4% to like 16%, like 4x jump. Personal loan business, their entire AUM in that particular year was close to like 1,500 crores. Same is the case with mutual funds. So they started with the index funds. So they started with the Nifty 50 index fund, and they had the lowest expense ratio in the industry in that particular category. So basically 0.06%. So if we just talk about the portfolio, so they have personal loan portfolio, they have home loan portfolio, they have health insurance portfolio, and then they have AMC. When we talk about the financials, the first year was pretty straightforward. They had close to 200 CR income, 210, 209 and 210 CR. 209, 210, and the expense was around similar-ish, around 205, 210. So they made a slight loss, a marginal loss of let's say around 5 to 6 crores. In the second year, which is basically FY21, which was technically a bumper year, where they made overall profit of 73 CR, and basically in the second year of operations where any fintech in India has ever done that, profitable. marketing expense was very minimal. Um, it is in this particular year is basically FY22. Their marketing expense has increased to like 400 crores, and that's why we see we see a loss which is close to like 200 crores, which is still much lesser than the other fintechs, because the revenue is still there. They have revenue close to like 600-700 crores, and the total expense is close to 950 cr. But Navi is not losing focus. They have maintained their stance as the profitability is one of the key metrics. They will try and track it. They want to become profitable as fast as they can. Somehow they have controlled their sales and marketing expense, and which you can see from their financials, and it is actually working for them. Yeah.
Certainly sounds like it was a bold move that's working out. What does the future hold? I believe they're planning to IPO, and Sachin Bansal owns 97-98% of the company. What does the future look like, and where do you see it going?
Sure. So if you just look at the IPO document, so Navi has provided some interesting statistics. So Navi's entire loan portfolio is close to like 3,000 crores. Have 4 million people, 400 active app users. They have one of the lowest NPA ratios for personal loan in the industry, which is at 0.03%. Apparently, this is lower than some of the marquee Indian banks. Microfinance loans NPA is less than 1%. Again, this is one of the best in the industry. Some of the marquee microfinance companies have NPAs of around 2 to 3%. Sachin Bansal wants to take this company to, let's say, $100 billion kind of a company where it can actually compete against the likes of Bajaj Finserv's or the HDFCs of India. If you just talk about the IPO, so two interesting things. First, the IPO is of close to 3,500 crores, 3,350 crores to be precise. This is still a draft, red herring prospectus. Most of the money they are planning to use to expand their personal loan portfolios and insurance portfolios. Asset management, they have not mentioned about anything. And Sachin Bansal holds 97% of the stake. What they are trying to replicate is what Zerodha did with the broking industry. If they are able to pull this off, then basically at a minimal cost of acquisition, they get a lot of customers. It's an asset light model because everything happens digitally. And if they control the NPA, then I think we are talking of a different league company. Basically, this is a company which can compete against HDFCs and Bajaj Finservs of India. And this is technically a finance company and not a fintech company. And Sachin Bansal also mentioned that in one of the interviews that this is a finance company and which happens to be good with technology, and this is not a fintech play as per him, and which I also personally believe, looking at the numbers and looking at the growth statistics. Yeah.
It's just amazing. Certainly sounds like they have a bright future. Thank you, everyone, and thank you so much, Path and Ramandeep, for the session. And we'll see you all next week.
Yeah. Thank you, Mazin.
Thank you, Mazin. Thank you, Raman.